Well, happy Monday. It is August 5th and want to bring you the latest data here in the Austin metro area. We have to talk about mortgage rates. There's a reason I make this video each and every week because big news can happen even in a short amount of time. The big one right now is mortgage rates. Last week, we were over a half point higher on mortgage rates. There's been a huge drop in rates. The reason is complicated, but a lot has to do with some factoring in of economic data that is showing things are slowing down maybe quicker than people expected. And on top of that, there is more expectation that the Federal Reserve is going to have to cut their rate sooner than later, which means at minimum September, and they could even do it in August, although I expect it'll be in September. But right now, the 30-year fixed, and this is just a par rate, is around 6.4%. The 15-year is now below 6%. The FHA and VA loans are now low sixes. Let's look at this in more detail. Rates are plummeting as the market, meaning the stock market and the bond market, buys in to this downward shift in the economy. Look now, these do not take these as quotes for you, but just look, we're finally seeing some lenders that are starting to have 5% rates on the front end of their mortgage rate. Let's look at the chart. This is the 30-year fixed, and I went all the way back this date right here, which was our peak for 2024 on rates. It was 7.5% back on April 30th. And this is when the spring's happening. I've said this weekly ad nauseum that this was the worst time to have high rates because this is typically when all the sellers are hitting the market. They expect that big boom in spring buyers, and it killed them. Just high rates, everybody backed out. And rates stayed above 7%, above 7%. June, we get into July. It was July 10th when we finally dipped noticeably below 7%. And we stayed about 6.8 to 6.9 through last week, or July 25th, a little over a week ago. We got to last week. Look at this drop. We went from 6.9, we are down to 6.4. And I expect by the end of today, it'll be lower. So we are seeing a massive drop off in mortgage rates quickly. And what's happening? So mortgage rates are dropping. They're now over a 12-month low. They are at the lowest point we've seen since June of 2023. Obviously, there's some recession fears. Some of it could be overbaked. We'll just have to see how things play out. But the economy, meaning the bond market, the stock market, are starting to already bake in what the Fed hasn't done yet. They're baking in the fact that rates are going to have to come down. The economy is slowing faster than normal. The jobs came in. The unemployment went higher than normal last week. The jobs were lower than normal last week. So all that news is feeding into the markets. What affects mortgage rates? If the Fed has not moved their rate in over a year, why are these rates going so wild? Well, we follow the 10-year Treasury in the mortgage-backed securities market. So here's the 10-year Treasury, okay? If we go back to July 23rd, our rate was 4.28% on a 10-year Treasury. This is investing in the bond market. Since then, look at this massive drop off, and we're even lower today. We're about 3.74%. So that means in just a little over a week, it's dropped over 0.5%, which in the bond market is massive. So anyways, that is affecting the yield on mortgage rates. The good news is that means mortgage rates are coming way down. Buyers haven't yet figured that out. I am here to tell you they are coming way down. Let's look at the market itself. This is number of active versus sold listings in real time. The green is active listings on the market. These are sellers with homes that you can buy. They are slowly starting to come down. The sales have still been anemic for most of this year because the rates have been high. But we don't know what's going to happen in the coming weeks or months. I can tell you my Facebook feed is filled with friends and clients that are all on vacation. Some are at the Olympics. Nobody's in town. And so sales are going to stay slow for another couple weeks, but everybody's coming back to town when school starts or their job gets back into business late in August. We will see if these lower rates are going to start pushing buyers back into the market. I will be telling you each and every week if that happens. But for right now, I do think we've peaked on inventory for the year. We will see if we get a little sales bump this fall with buyers coming back in. So that's a look at active versus sold listings. Here's original price versus sold price. And to me, this is another piece of data that could tell us we're getting closer to some equilibrium. So obviously rates went way up in the spring, right? When all these sellers were hitting the market, they're all trying to list for a higher price. That is the green, is the price that the overall market was asking. Blue is what the buyers median were buying, what price. So we kind of peaked out this year around 455. It hasn't come down that much in terms of closed median price. It's about 5 grand lower than we saw back in April. What's really come down is the aggregate list price. So we were averaging about 530 in April. Now we're averaging about 480. So that's 50 grand. That does not mean houses lost 50 grand of value. That means list prices lost 50 grand of value. The house prices haven't moved that much. They've stayed pretty much in order. So it's just sellers realizing that it's harder to sell. They got to get down to that more attractive price to get a buyer engaged in that property. But now that we are getting to that point where this gap between the list price and close price is getting a lot closer, and now we have a huge drop in mortgage rates, what is that going to do to bidding, to buyers in the market? We're about to find out. We will not know that data in terms of closed sales. So buyers bidding in August are going to close in September, and we will find that data in October. So we're not going to know until October what's happening with buyers right now, unless you watch my videos, and I will tell you. But for right now, we're watching that. I think that's the biggest news. If we go back to mortgage rates, this is the biggest mortgage rate move we've had since the Fed started raising rates in April of 2022. So for those that have been on the sidelines waiting for, quote, rates to drop, you are getting an answer now. I think the next excuse we have to watch with certain buyers is, well, I don't want to buy because we might be going into recession. I can't help you there. I don't know who can. But I think if you are looking for a window to have high inventory, lowering rates, and the best rates we've seen in well over a year, this is a fantastic window to be looking at property. If you are a seller, obviously this is the news you've wanted too, is to be able to have your buyers have an easier way to purchase your home. Lowering rates will help there. You still have the challenge of higher inventory, and I would expect some patience is still needed in the market to move homes right now. Anyways, pay attention to this. Watch rates this week. Over the course of this week, let's see if they stabilize at a certain level or if they continue to drop, or for some reason, if they have a bounce. I think we are less likely going to go back to 7%. My curiosity is, will we get all the way down to 6%? As that par rate at some point this fall. Keep an eye on that. Anyways, you can watch our videos each and every week. Check out our YouTube channel at Ryan Kelly Group. If you want to see how quickly the rates have dropped, I've made 3 videos in the last 1 week. You can see them all on our YouTube channel. And of course, if you know somebody looking to buy, sell, or invest in the Austin area, would love a chance to chat with them. If you want to know what your rate would be, reach out to us. I can put you in touch with some of our preferred lenders, and they would love to run that number for you. Anyways, enjoy the second week of August. Keep watching the Olympics. It's exciting, and we'll talk to you next Monday. Thanks.